Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having a fantastic, amazing Saturday here. Happy Saturday and wonderful weekend to you and your family. We're taking a look here, of course, at Ethereum. And the main reason why is because I got a lot of requests for this here recently. Not necessarily because it's doing anything special, it's more so the fact that I used to cover this frequently and I need to get back on top of that. So if you want to see this happen more often, feel free to let me know. I'll try to plan to do Ethereum a little bit more frequently. Same with my daily Bitcoin update videos, okay? But for now, that's kind of where we're at here for Ethereum. Let's go ahead and take a quick look. And while we're setting this up, just want to let you know I'm not a financial advisor, right? So I do love teaching people to trade. I really hope you can learn something here today. And my goal is to effectively help you become a better trader, right? That's kind of the purpose for all this. So essentially, if that is something you find from this, please feel free to comment below, let me know, or message me direct. I love to hear good feedback. Even the negative stuff too does help, if that makes any sense. But what I'm getting at here is that I have a trading academy community and signal group. So if you want to become a better trader, go ahead and check that out. We have a really cool, awesome community. We do trade Bitcoin and Ethereum quite frequently, so this does make sense to cover. And then of course, just in general, it's one of those things that'll kind of help you become a better trader because I provide you with a lot of skills in my trading academy. So I've got a lot of new members coming here recently, so be sure to check that out. Over 200 active members presently. So at this point, we're looking at Ethereum. So what is the big deal here? What's going on? Where are we at? So let's go ahead and take a look at that, of course. Let's start with the moving averages. In fact, let's get this out of the way for the moment just so we can kind of see. And we can see we're above both the 50 and the 20-day SIP moving average. The 20 is kind of working itself up here as a potential support level. So we could very well see the price action continue to progress upwards with it. It is common for the price action to kind of follow the 20-day SIP moving average initially and then transition over to the 50 to work above that. Key is we're above both, and that's the important thing. Do need to recognize though that right around 2400 is the 200-day SIP moving average. That is notoriously resistance level, but if we get the 50 to come up, just say for example to intersect with that, that's referred to as a golden cross, and that's ultimately what we're looking for. So we're on the right side of the tracks in that regard. It's okay to be under the under the 200 and above the 50. That's a positive sign because it in most cases leads to a very, very good situation. All right, so that's kind of where we're at there in that sense. Looking at the RSI, we can see we're close to overextended, but not quite there. Bitcoin is like a little bit lower than that right now. So Bitcoin does have more room to grow. And if it does, Ethereum could do so as well. But we can see somewhat of a shift here or in potential momentum. In other words, a strong resistance level right here at about 1725, because we got a double Doji candle pattern forming for now. That does imply we could see a little bit of downside. Okay. So I wouldn't be surprised by that because on Monday I expect the price to kind of correct itself for Bitcoin. So why wouldn't Ethereum follow suit? All right. Even though Ethereum isn't 100% exact or right there with it, it's fairly concurrent in a lot of ways. Okay, because a lot of Ethereum success is based on Bitcoin not doing terrible, right? Just keep that in mind. All right. So in the overall sense here, the daily we're slightly overextended. We're not extremely overextended, but we've got these two Doji candles forming, which is never typically a great sign. Double Doji does typically imply that there's a lot of indecision in the last 48 hours, and that could effectively cause the price action to come back down. Okay, so I think it's more likely than not the price is going to come back down. And again, there's a likelihood I feel that Bitcoin is going to correct itself down to 24,000 and bounce. So if that's the case, Ethereum could just come down to 1690 and bounce. It could even retrace as low as 1620 and get a bounce there too, because again, we got this pretty consistent trend setting here, right here in the range of about 1600. Okay, so again, 1600. In fact, why don't we just go ahead and draw a line out here? The one-day candlestick close, we can see that's a pretty strong resistance level previously. Therefore, a strong support level now. Right, we had that little descending breakout, and the price, ascending breakout, and the price essentially continued, but we shouldn't expect Ethereum to take off from here unless Bitcoin does as well. That's kind of the general consensus. I would say more likely than not, based on what we have here so far for this data, the likelihood is for the price action to more so go down than up. And I'm only saying that just based on overextensions. We're close to 70 on the RSI on both the daily and the 4-hour. Not to say it's a problem if this 4-hour RSI breaks. It's just that it's common for the price to retrace when that happens. So the fact that the price is going sideways right now give us this potential type of pennant pattern could imply we could see a breakout to the upside as well. There is a chance of that. Again, a lot of it is contingent on Bitcoin and how well it does in the next 24 to 48 hours. So anyways, that's kind of where we're at there. We do have a MACD divergence as well, which is something to recognize. It's not necessarily a terrible thing, but that concurrent with the double Doji tells me a little bit more in the sense that we're probably more likely to go down. Again, when you're looking at data like this, all you're trying to do is extract data from different time frames to build a a short little synopsis on which direction it might be heading, right? Because all this is a probability game. It's definitely no guarantees. You could have every single confirmation in the world, and some kind of fundamental catalyst will cause it to happen, nullify that completely. Which we saw recently with Bitcoin Fed meeting, rates going up and the price going up. It's just kind of one of those things where some contradictions do happen. Regardless of that sense, what I'm getting at here is that we have a MACD divergence on the 4 hour, right? We've got a RSI closer to 70, telling us it's fairly overextended. We've also got the same thing as well on the daily with the RSI, and we also have a double Doji. So putting all those things together, those pieces together, so to speak, tells me we're more likely to go down than up. Let's take a look here and see where we're at in the cloud. This is one thing I'm kind of curious about. We are still maintaining functionality above the cloud, but if we were to break and just say lose 1690, I think the likelihood of it coming down to 1600 is pretty high. Right. So again, I don't think we're going to see a super massive correction from Ethereum unless Bitcoin drops to 21,000. But on the same accord, we're potentially going to lose the cloud here soon if the price just continues to go sideways as it is. Okay. So the price has to do something. But what it's telling us here is that if you have a long position, you should have closed it by now or taken some profits, because the lagging span's been intersecting with the price action for the last 24 hours. And it's essentially lost its momentum. Same thing here with the conversion lines below the baseline. That's typically not a great sign. That is a signal for a reversal. So we've literally only got one saving grace here, being above the cloud, letting us know that we are in good shape. But once again, this cloud is naturally progressing upwards and the price is naturally progressing sideways. It could very well break below. So I would say a candlestick close today under 1700 would be disadvantageous. But in general, I wouldn't say we're in dire straits, but once again, everything here that we're seeing so far is effectively telling us the price wants to come down, not up. Okay? That's just what we're looking at. That's what the data is telling us here. So again, I do think that the lowest point in which we'll see the price action come down is 1600 if it were to lose 1700. But if that were the case, all well and good. I would say maybe consider a short position from 17 to mid 16s. Try not to get super greedy. Don't put your profit targets at specific levels of Fibonacci or support levels. Put it just above. So instead of 1620, for example, that's the 0.618 on Fibonacci. That's a common retracement area. Put it just a little bit higher. So instead of 1620, 1630, so you get filled. All right. Just little strategies to make sure that you stay afloat in this game, because again, this is a big game, and a lot of it is a mind game too. So make sure you're right in the head when you're trading. And what I think I said, chickadee, check yourself before you wreck yourself. In one of my last videos, it got a big rise off that. Turns out that was Ice Cube. I forgot about that. But regardless of that fact, you do need to check yourself before you wreck your account, right? If you're in a bad, terrible mood and you're trading, you're doing it wrong. You got to find ways of being not necessarily happy, but more so positive and thinking clearly. Me, I exercise and work out 4 or 5 days a week. That's my thing. That's my jam. I swim with my dog all the time, right? There's different things that I do to kind of stay mentally prepared for this, because it can really eat you up if you take a loss. And of course, we took a loss here recently, and that's all well and good. You learn from that. That's the important thing. But losses do happen in trading, and the important thing is get back on the horse. If you ride horses, get back on the saddle, whatever the hell it is, and make sure that you are not revenge trading. Take a little bit of time, take a walk, whatever it takes, but keep this clear, if you will. Again, those are all things I teach in my trading academy, so if you want to become a better trader, CryptoCache.tech is a site, link in the description below. We've got a lot of new members transitioning over, which is really awesome to see. So, again, thank you for that vote of confidence. I'm confident that you'll benefit and do very well, and we'll go ahead and take it from there. So thanks so much for joining me here. I hope you have a great rest of your day. We'll see you in the next video. Take care.